Hello, and welcome back to CrossCourt Capital's annual tradition, A Year at a Glance. It's a pleasure to address you all. The year 2024 began with high hopes, bolstered by a significant backlog of M&A transactions that had been building up from the latter half of 2023. A declining interest rate environment had fueled expectations that inflation was finally under control after 2 long years of relatively high rates, sparking a sense of optimism. However, this anticipated outcome did not fully materialize. The slowdown in Europe's major economies, particularly Germany and France, as well as other manufacturing nations, has once again put buyers in standby mode. After a strong first half of the year, we witnessed a decline in M&A activity starting in Q3, which further slowed in Q4. The downturn in corporate financial performance, tied closely to that of countries' industrial production, has led to growing skepticism among investors. We anticipate that many companies in traditional manufacturing sectors will report declining sales and margins. As a result, investors are holding back, cautious about overpaying for businesses. In the opposite, they are particularly focused on taking advantage of falling vendor valuation expectations, driven by a combination of weak underlying financial performance and lower valuation multiples. In contrast, service businesses are expected to continue growing, assisted primarily by the increased adoption of technology, with artificial intelligence leading the way. This trend is evident in the significant rise of tech-related stocks linked to the AI boom. While many private equity funds are still struggling to exit their portfolio investments, there is generally ample dry powder available. We believe that the most innovative and risk-tolerant acquirers have a unique opportunity in this difficult investment environment. Success will come to those who are resourceful enough to develop valuation strategies that can bridge the uncertainties that arose in 2024. From a geopolitical standpoint, we anticipate significant changes ahead. With the Trump administration preparing to take office, we can expect disruptions in tax policy, the financial regulatory environment, exchange rate policy, energy transition, trade balances, the adoption of cryptocurrency, and many others. Additionally, the potential resolution of 2 major armed conflicts could bring further shifts. While these issues are evident to most professionals and need no further elaboration, the real challenge lies in understanding their full impact. A period of peace and stability would certainly be welcomed by both businesses and the investment community. From our perspective, we believe that the most strategically driven investors will fare well, while those who are fundamentally risk-averse may struggle in the current environment. Regarding our activity in 2024, we conducted first-time visits with 47 companies, 16 of which led to introductory meetings with our client investors. This pipeline resulted in 6 non-binding offers, with 3 transactions granted exclusivity. We successfully completed 1 landmark transaction, where we assisted in the private placement of a mid-market company specializing in the distribution of electric components in the B2B space. It was a fantastic achievement for us. This year, we're proud to say that we were actively involved in all 3 of our key service offerings: investment M&A for platform acquisitions, add-on acquisitions for strategic operators, and sell-side advisory, an area where we aim to grow. Additionally, we were engaged in an exciting new add-on acquisition mandate and tasked with delivering a complex fairness opinion in the renewable sectors. As always, you can check out our 2024 origination and execution statistics on www.crosscourtcapital.com. From an industry standpoint, market interest is evolving naturally. We're seeing strong demand in sectors such as electricity management, healthcare, education, and of course ITC. In manufacturing, there is growing interest in chemicals, climate and water flow, and various types of electric components, driven by the broader electrification of the economy and pickup in underlying infrastructure renovation. We're positive on 2025, but we firmly believe that advisory services will be crucial for transaction management and due diligence analysis. Intelligent valuation expertise will also play a key role in ensuring seamless M&A transactions. As always, we would like to take this opportunity to wish you and your families a peaceful holiday season and a prosperous new year.